Good morning, ARMR Insiders. Welcome to the morning meeting of our virtual hedge fund. Thank you for joining me. As always, I appreciate your time spent on the desk with me as we manage this virtual fund together. You're a portfolio manager on the desk. This is our morning meeting. Grab a pen, piece of paper, get yourself ready. And as always, whatever I share, figure out how it fits your risk tolerance, your goal, your strategy, execute it, and be the smart money. All right, so macro fund, 80% short the market right now. Why would I get that short? Let's talk about that today. Who should be shorting and who should not be shorting? We're going to talk about that as well. Going to go over the makeup of the ARMR flagship fund and how we're dealing with this market, things you need to know about a market that gets really ugly. I'm going to share some key thoughts from having been, to this rodeo many times. I titled this discussion today, "Is this March 2000 all over again?" Let's talk about that. And we'll wrap up with some portfolio changes, what's on the whiteboard, things like that. So obviously, let's dive in real quick to the indexes. We'll talk about NVIDIA in a second, but the NASDAQ has unwound the entire rally off of the Trump victory. So we're back down to the lows of the day it gapped up. Okay. So we then move over to this chart again, which is Tesla and Bitcoin. Okay. Tesla and Bitcoin are unwinding the move from election night. This is just something we've talked about all week. The leaders are leading to the downside. The NASDAQ 100, Tesla, Bitcoin, these are all the things that got overexcited because of the Trump victory, which happens often in the stock market. And now reality sets in, reality of tariffs, reality of, all the government cuts. These are all great things long-term, but make a lot of volatility and uncertainty near-term. And the market hates uncertainty. Why would I say that this is, possibly March 2000 all over again? Let's review what happened in March of 2000 in case you weren't investing at the time. Let me tell you what happened. And tell me if this sounds similar to what we're dealing with today. 1999, 1998, 1999, big years for this new game-changing technology that's going to revolutionize how business is done in the world, how you wake up in the world and things that you do. It's going to be massive, complete game changer, unbelievable investing opportunity. And it was called the internet. It's called the internet. It was a major game changer. I wouldn't be able to have this conversation with you without the internet. But believe it or not, that was a new concept in 1999. Market was up big in 99, had a huge Q1. Dad and I running money back in 2000, we were up something over 30% the first couple of months of the new year. Total euphoria. Tell me if this sounds similar. Game-changing technology. New revolution in how business is going to get done. Companies were coming public with .com in their name, raising capital, burning through that cash at a rate never before seen. I mean, just raising cash and burning through it, trying to build businesses that made money off of the internet. The most notorious being, if you recall, the insane amount of money spent by pets.com on the Super Bowl that year with a ridiculous sock puppet talking about how everybody should be buying their dog food through pets.com. The company went bankrupt. They never made money. They burned through all their cash. The market didn't care at the time. Stocks were going through the roof, and everybody and his brother at whatever party you went to, probably the Super Bowl party, was telling you how to invest. where you should put money. It was obvious. It's all of these internet stocks. And you said to them, well, they don't make any money. They're burning through cash. You don't know what you're talking about. This time's different. You've got to get on these stocks. March 24th, 2000. I remember that day clearly. I was a young man. I'd only been working in the business since 1993 professionally. And I had my own personal portfolio set up. I had 10 stocks in my portfolio at the time. 10 growth stocks. I was a William O'Neill guy. I still am. So I had 10 growth stocks in my portfolio. And I was using stop losses, much like I do now. But my stop losses then were the William O'Neill recommended 7%. On the 24th of March, every single position I owned, I went from 100% long and had a really great start to the year to 100% cash in one day. Every position got stopped out. And I mean, it was gap downs, not just like 7% stop losses, but things were gapping through it, down 10%. I mean, it was insane that day. And so, boy, I was like, holy smokes, my whole portfolio must have been down at least 10% that day. And I learned a very good lesson that day because it felt awful that day that I got stopped out. And so I looked back at it and I was questioning, God, were my stops right? Should I not be stopped out? But I was following the discipline. Thank God for that. Because over the next 2 months, the NASDAQ 100 dropped 50%. So getting out day one was the best possible thing I could have done. Thank you, William O'Neill, for that lesson. Market cratered 50%, and it didn't really recover. It had some wild swings during 2000, so there were definitely trades you could make during the year and make money if you were swing trading. But the investing, I mean, the investments were dead. Gosh, I go back and think about it. 2001 was a terrible year. We went into a recession. It took a while for those stocks to recover. And some of the best internet stocks dropped 50+% before turning around and, skyrocketing. Google, Facebook. Facebook came public in 2002, I think. But Amazon, these things, Amazon was burning through cash at the time. I mean, these things got cut in half before they turned around and became the names that they are today. Now let's look at what's going on today. Big year last year. Market was up big. AI was the new great technology, creating an industrial revolution. Companies coming public, burning through cash, probably never going to be profitable, a number of which will go out of business in this down cycle. The beauty of this is that there are going to be a number of fantastic companies that are leveraging AI that will be fantastic investments coming out of this sell-off. Is the market going to drop 50% this time? I don't know. It did that time. We headed into a recession. Looks recessionary right now. There's a lot of things going on economically that fit the same pictures the year 2000. And you have the same blow-off explosion in companies going to, let's be honest, ridiculous multiples. I don't talk about multiples very often, but this is like ridiculous multiples that are burning through cash. It's exactly what happened in the year 2000. So buckle up. There's some type of correction unfolding. Don't hate that correction. We should love that correction because we got tons of cash on this trading desk. And we're going to be able to lay in some of our best investments we thought we missed. Palantir is imploding. I love that story. Probably going to be a great opportunity again at some point in here. NVIDIA. This NVIDIA chart, this is like the poster, right? This is the leader. This is the centerfold of the whole AI explosion. That's a massive fourth stage base top. It's a top. It's breaking down. Let me tell you something. In just so you don't think I'm only a trader. Sometimes I speak to you guys, you think I'm not just a trader. I'm an investor. Look, Dad and I bought shares of Illumina at $1.50 on a split adjusted basis in I don't know, year 2001 or something. And we had some investors, some clients carry that stock all the way to 500. Dad and I traded it on the way up, but from 150 to 500, it was a company at the cutting edge of a new technology, dominated the business, kind of made the business. This is what NVIDIA is. It's almost the same type of scenario. But what I want to tell you is from $1.50 to 500, there were multiple 50% corrections from $1.50 to 500. So sure, you can own it from $1.50 and go through multiple 50% corrections and hope 20 years later, it was a 20-year move, 20 years later, it's 500. You could certainly do that. But on my desk, what I do is I use technical analysis and stop losses. I raise cash when it becomes obvious the stock is making a major top. And I don't forget about it. This is phenomenal. I can't wait to buy NVIDIA. Do I get to buy it down 50%? Maybe. I don't know. Wherever we get the next entry point is where I'll be looking to add NVIDIA. All of these names go to the top of my whiteboard. It makes the whiteboard, the top of the whiteboard is heavy with some great ideas. I do want to remind you, if I can just take a moment here and remind you, on Wednesday, no, it wasn't Wednesday. On Wednesday, I shared with you, just to wrap up this discussion on NVIDIA, I shared with you the comments from the CEO of Microsoft. And I cut that comment and I put it in my YouTube channel to make it easier for you to watch that one comment. It's in a short that I put up in the YouTube channel. And I gave you a link in this captain's log, so you can just click it and go see the short and see what I said on Wednesday. If you'll allow me a quick bow, in all humility, if you'll allow me to, what I said then was, I expect NVIDIA stock to be up on earnings, because they're going to probably beat the number like they always do, but not as much as people want, be up on earnings, down by the end of the day. That is exactly what happened yesterday. Sometimes you get it right. The biggest issue, and what I highlight in that short, is that Microsoft's CEO, one of the biggest players in the AI revolution, is questioning the speed of that revolution. He's asking the question, before we can call it an industrial revolution, we got to see an industrial revolution size growth. And right now, he says, AI isn't showing any growth. When one of the biggest guys in the space is questioning what's going on in the space, what else do you need to know? And so that kind of dovetails into my positioning right now. I am over my skis, short the market, focused on the semiconductor index. But you guys know I've been hunting this. I've been stalking this bear for a long time here. Okay. I think before this is all done, the whole semiconductor index rewinds most of this move. The reason I think that is I've been doing this a long time, and semiconductors are a cyclical business, and nothing changes that. Not AI, not anything else. Let me tell you what happens. Let me tell you what happens in space. And Microsoft CEO is waving the white flag, the red flag, whatever you want to call it. He's telling you what's happening in the space. This happens every time in semiconductors, okay? I'm going to tell you something now, and you're going to want to write this down, put it somewhere, and remember this. This is particular to the semiconductor space. I know that NVIDIA and the CEO of NVIDIA comes out over the last X amount of quarters touting how much demand he has. Look at my backlog. Look at my backlog. It's enormous. It's enormous. Let me give you a secret. This is a secret about the semiconductor industry. When you have insatiable demand for a particular chip product, which we do, which we've had, the end users, the Microsofts, Googles, Teslas, all these guys, they put in purchase orders. They might need 1x amount of chips, but they'll put in an order for 3x because they know they won't get filled on their complete order. So if they put in 1x, they'll get maybe a quarter of 1x. If they put in 3x, they'll get a third. They'll get what they want. That's just how it works. And so all of a sudden, what looks like a massive backlog, when the cycle turns, and one of the biggest guys in the space says, which is what Microsoft has been doing, we are pulling away from leases. We think there's an overbuild in cloud and AI data centers. All of a sudden, that magical looking backlog starts to dwindle because the big players don't want delivery of everything they've ordered. I've seen this happen over and over and over again in semiconductors. I don't care how exciting the product. I think we've entered that phase. And if I'm right about that, then this semiconductor index, the whole index, is going to go a lot lower. And probably NVIDIA drops 50%. Let's talk now about why am I short? Okay, because I haven't shorted in a very long time. I don't remember the last time I carried a short position for more than a day or two. But I have positional swing trading shorts right now on the NASDAQ, small cap index, the Dow, and the semiconductor index. Before I dive into this, let me remind everybody, my suggestion is nobody should short. It's a dangerous endeavor. You can fall down a rabbit hole being short. Nothing's worse than being short when the market's going up. It's brutal, okay? When you get it right, you can make a lot of money quick. What's the upside to shorting? Stocks go down faster than they go up. So that's the upside of shorting. So I'm going to say some things about being short, but the caveat here is I don't think you should be shorted, okay? Unless you're on the desk with me all day trading. And so, and even then it's difficult. As an example, I was about 50% of my macro fund was short heading into the day yesterday. At 10:30, I covered the whole thing. And at 11:30, I put the short back on and increased the size. And I was 80% short at that point. Okay. So when I'm talking to you about short selling, if you're not with me all day trading, I could be off the short side in an hour. So I have a short bias. I think the market's going a lot lower. I don't intend to cover my short right now. Okay, if you want to know where would my cover be, it's the high of yesterday. Okay, this was kind of a gift. Yesterday was a huge down bar. So if it takes out the high of that bar, goes back above the 50-day moving average, I would cover all my shorts. If it stays below that, I'm probably going to stay short. I reserve the right to cut my size back down because really my max should be 50% and I'm over my skis right now. So I don't know what I'll do with that big position. Okay. So having said all that, I'm going to share with you why I'm short, but please understand it's a very dangerous endeavor and it's not for most people. The reason I'm short, what I said to you, and I want to share this again, not just for short selling, but to help you execute going forward. On the 21st of this month, okay, right here, the risk monitor went red. Okay, and what I said to you that day, and what you've heard me say this repeatedly over the years we worked together. When the risk monitor, a new risk monitor green signal, goes red within 5 days, the probabilities that the market goes lower are incredibly high. Doesn't always crash like it's crashing now, but the probabilities it goes lower are incredibly high. It's a piece of information that our algos are giving us. So sometimes people get caught up in, oh, I just bought it and now I'm out and that didn't feel good. You're missing the beauty of the information. It's a probability algorithm. Sometimes we're going to have a stop hit. If it's hit within 5 days, the market's in serious trouble. So for the average investor not shorting, that means you've got to execute immediately. If we got long and within 5 days it's red, everything has to go. There can't be a discussion about, well, maybe this, and I like this idea, and I'm a long-term holder in this idea. That's not the ARMR investing way. It's exit immediately, and if you want to be aggressive, get short. So that's why I'm short right now, because that signal doesn't happen very often. And when it does, we're talking 90+% probability that the market's going lower. This is exactly what's happening now. So for the first time in a long time, I can't remember the last time I was positionally short. I really can't. I can't. I don't even know if I did it in 2022. Did I? You guys might remember. Maybe we did. I don't remember. But it's been a long time since I put on a positional short. This looks like a perfect double top to me, with the leader in the stock market putting on an unbelievable fourth stage base top and breaking down. The leadership sector, semiconductors, are in the process, I think, of going through the normal, natural cycle of semis, which is to sell off pretty aggressively now. And it feels to me like this is March 2000 all over again. And that's why I'm short. So figure out your risk tolerance, your goal, execute your strategy, and be the smart money.